Paul Krugman declared inflation dead in 2023, but the data tells a different story. The latest PCE report, the Fed's preferred inflation gauge, just came in, and there's been zero meaningful improvement in the past year. In fact, core PCE is ticking higher than expected. Meanwhile, Americans are saving more and expecting the economy to get worse. What does all this mean for the Fed, inflation, and your wallet? Let's break it down.
Gary, jumping into thing number one, we're talking about the core PCE. Paul Krugman said that we've defeated inflation. Well, he said this in 2023. Thing number one, Gary, PCE is rising again. What do we need to know?
Yeah, so Krugman calls himself an economist. I would relabel that as a partisan narrative spinner. But, he a couple of years ago said we had won the war against inflation and at very little cost, yet here we are. That was always a lie. So this past week, we got the Personal Consumption Expenditures Report, PCE. The PCE is the favorite inflation metric of the Federal Reserve, and the reason for that is because it more closely matches consumer experience. As a reminder, when we get the CPI, the Consumer Price Index, that's a basket of goods, and your experience will, of course, be different. Over the last few years, people who had to buy a new house or, rent something that, at a different rate, or buy a car, they experience much higher inflation than, people who were buying hard goods where prices were much weaker. So it really depends on your experience. And that's why the Fed looks at the PCE, because that's what consumers are actually buying, what they're actually spending is their experience. So the February PCE was up 2.5%. That was consistent with last month and consistent with expectations, but there's been no significant improvement in the PCE over the past year. We have a chart in the written version of the 5 things, and you can see that is pretty flat for the last year. But the core PCE, and the core number excludes food and energy, that was another story. That metric was up 2.8%, which was both above last month's 2.6 and above expectations of 2.7. The monthly increase in the core was 0.4%, which sounds like not such a bad number, except that 0.4% month over month annualizes to 4.9%. That's a problem. Like the all items PCE, there's been very little progress made in the past year. And so what you see when you look at the chart, which we have in the written version, is that the PCE inflation goes up, peaks in 22, and then we have disinflation, which is just a slower rate of inflation. And then about a year and a half ago, that chart gets pretty flat for both the core and the regular. So we have not defeated inflation, and it is sticky and definitely not non-transitory. As a reminder, we started warning people about higher non-transitory inflation in November of 21. That's almost 4 years ago. So, Krugman was wrong, and anyone who used the word transitory was wrong.
Yeah, interesting. And Gary, you mentioned the written version. Just so everybody knows, if you head to our website, you want to add your email to our newsletter list. Every week we deliver a written version of the 5 things as well, jam-packed with all sorts of charts and great information and takeaways from Gary that he's given on this show here, the 5 Things Show. Gary, with that, what are we seeing from consumers when it comes to their income, savings rate? Is there anything that we could see that the consumers are telling us, or what are you seeing from them?
So there was a really big number in there regarding the personal savings rate. So we do get that every month with the PCE report. And that's risen in each of the past 2 months while Americans' expectations for the economy continue to fall. So income was up a strong 0.8%, and that means people are spending more, but also saving more, which seems like a rational response to me. So if you want to take the negative side of that, you would say, we have a consumer-led economy. Consumers are not spending. That's going to be a problem. And yeah, when, Americans stop spending, the economy, if you have a consumer-led economy, if we have a consumption-based economy, less consumption, becomes a problem. But I actually don't mind seeing this. I have been concerned about the fact that Americans have been using more credit, about all these reports that, the vast majority of Americans don't have a few $100s saved up for any kind of emergency. When people are expecting a weaker economy going forward and their response is to save more, I actually view that as a good thing. These are people who are, saving for a rainy day. I'd like to see that. I don't think it's a bad thing. The potential difficulty to all this comes if Doge succeeds in cutting wasteful spending and employment. If they succeed in doing that, we would see reduced government spending, which would make more clear the weakness in the productive private sector combined with continued inflation. That's going to create a dilemma for the Federal Reserve. The only thing that I would add to that is if cutting wasteful spending from the government creates some sort of economic problem, then that means you had a problem to begin with, right?
Yeah, yeah.
If you need government waste to make your economy work, you don't have a working economy. And all that's happening right now is the weakness in the productive part of the economy is becoming more clear. So we're not really having an economic downturn, despite what the statistics will say. What we have is more clarity on the current state of the economy. This is something we've been talking about for a couple of years now.
Yeah, I believe it was hiring people to dig holes and then hiring people to fill them back up.
Yeah, it's an old expression, but it fits our current situation.